Okay, on this video, I'll be showing you how to get your daily bias, how to know if an order block or a breaker block is valid, and also how to um, get a proper risk management when taking trades. So, firstly, the first thing you must always know when you want to get your daily bias or you want to get your direction of the market, you always have to look for areas where price is creating break of structures, or you look for areas where price is creating a market structure shift. So that alone will help you know your daily bias, or to let you know if price is going to continue on that particular trend or price is going to reverse. So that's one of the thing you must know when getting your daily bias. So let me do a quick example on daily bias. So you can also use higher time frames for your daily bias. Price always creates break of structures on multiple time frame. Price can create break of structures on from 5 minute time frame, from 3 minute time frame, 15 minute time frame, 30 minute time frame, up to daily time frame. So you always your strategy, your trading depend on the time frames you use. So if price is creating break of structures on daily time frame, for a candle to form on the daily time frame, it takes 24 hours. And if you are to take your entry using daily time frame, most times you have to wait for days, or you have to even wait for months before price will get to your entry. And same thing if you are taking trades using the 4 hour time frame. If you are marking break of structures on the 4 hour time frame, for each candle on the 4 hour time frame, it takes 4 hours for each candle to form on the 4 hour time frame. And we just have 24 hours in a day. So if you have to take your entry using the 4 hour time frame, you have to wait for a longer period for price to get to your entry. And also if you are using the 1 hour time frame, same thing, each candle take 1 hour for it to form. And for the 30 minute time frame, it take 30 minutes for each candle to form. So if you are looking for a directional bias, or you are looking for direction of the trend, and let's say for example you are a day trader, you are looking for daily setups, you can use the higher time frame, like the 1 hour time frame, 4 hour time frame, to know the direction of the price in those trend first. Then you have to go down to a lower time frame in order for you to get setups in that direction of the trend. Let's say on the 1 hour time frame, price is in a uptrend on the 1 hour time frame. When you go down to the 30 minute time frame or the 15 minute time frame, you are not going to be looking for sales. You are going to be looking for just buys. You're looking for buy entries in that direction of the trend. So let's say the 1 hour time frame is on a downtrend, you have to go to lower time frame, like the 30 minutes, 15 minutes, the 5 minutes. You are going to just be looking for sales in direction of that downtrend. You are not going to be looking for buys, because any buy that price will form, that buy won't last for long. It can just last for a few period of time. Then you see a reversal to the downside because of the sell trend. So you always have to follow the trend in order for you to be able to get your daily bias. So this is a 30 minutes time frame. And let's say for example now, and for example, let's say, let me mark this. Let's say price was in this area. Okay. Let's say when you open the chart now, for example, let's say when you open the chart, price was at this point here, was at this line when you open the chart. And from this previous side, let's say you didn't take all this trade before. So on this previous side here, the surprise was creating multiple break of structures. And what should make a break of structure valid is for price to break above previous high or the previous low with a full body candle. So from here now, you see price was creating multiple break of structure. And for each break of structure, you always see the pullback. You must always see the pullback for each break of structure. You must always see the pullback for each break of structure. So now you see price has been creating multiple break of structures. from here. So let's say you want to know your daily bias and you open the chart. First thing you must do is to mark the break of structures when you open the chart. Each time you open the chart, always mark the break of structure to know the direction of the trend. So you see, price has been creating multiple break of structures to the upside. So let's say up to this point, price move up to this point, for example, up to that high, for example. So after marking this break of structure, what should you do next? From here, you mark at every previous high that price took out after the break of structure. So mark out every high price took out after the break of structure. So this is the first break of structure. You mark that one out first. So now this is the second break of structure. You mark this out also. The second break of structure. You mark this out also. Then this is the third break of structure. You mark it out also. Mark this as a break of structure also. Then this was the previous break of structure. Last break of structure. Let's say when you open the chart, this was the last break of structure you saw. This was the last break of structure you saw when you open the chart. So now, you know, for each retest, once price push to the upside, retest here, this retest must always be either on a breaker block or on top an order block. Then price will push to the upside again, then retest. This retest also must be on a breaker block or an order block. Then price will push to the upside again. This retest now must be on a breaker block or an order block. Then price push to the upside again. This retest now must be on a breaker block or an order block. So now, after you mark this break of structure and you mark all this retest price did, what you should do next is that you should look at all the retests if all of them retested on a breaker block or an order block. If you see none of them, let's say for example one of the retests didn't tap into a breaker or an order block, but there's an order block there but the retest didn't tap into it, you will just put your entry at that point because price will eventually come for that breaker block and or the order block. So now let me mark that out. So this is the first breaker. Let me go to a lower time frame so I can mark that breaker block. So that's the first retest. Now what you should do next, after you mark the breaker structure, you mark that first retest. What you should do next, you should go down to lower time frames so you can be able to mark those breaker blocks or order block. So now this is the first breaker block here. This is the first breaker block here. This is the first breaker block here. So you see price retested on it. And if you check from the previous video I sent you on how breaker blocks and how order blocks look like, you can be able to get that from the previous video, how breaker blocks and how order blocks look like. And you know, a breaker block is an order block that got violated or an order block that did not play out. That's how you can be able to know a breaker block. So if you see let's say there's an order block, at this point here. So let's say there's an order block at that point there. And price was supposed to, let's say price was coming from downside and there's another block there. Price was supposed to tap into the order block, then push to the downside for the order block to be valid. But in cases where price did not tap into the order block then reverse to the downside, then you see price suddenly break through the order block. This order block has automatically turned into a breaker block. So after price broke above the order block, what you should expect next is for price to come back to retest on top of the breaker, the order block which has turned into a breaker. Price will retest on top of it, then push to the upside. So that's what happened in this point here. This is an order block. The order block now, price was supposed to tap into the order block, then push to the downside. But instead, price now broke above the order block. Now you see it came back again to retest on top of the other block which has turned into a breaker block, then push to the upside again. So that's how you can always use breaker block. So once you see an order block that got violated or the other block did not play out, that other block has automatically turned into a breaker block, and price will eventually come for it. Even though it's in the nearest future, or price keep avoiding that region, it will eventually come for it later in the future. So now from the previous video, remember I gave an example of different types of order block, and I told you about the one where you see a candle, then another candlestick at the middle of the order block. So now this is an order block. After the breakout structure, this is an order block here. From that previous video, if you recall, you can be able to spot the order block there. So this is an order block now, and price now was supposed to retest on top of the order block, then push to the downside. So if you follow this pattern here, if you follow that pattern here, you saw price now broke above the order block, and the other block has automatically turned into a breaker block. So you see price now came back to retest on it before pushing to the upside. So now if you should trace this line back, now trace this line back, you see this is breaker block. Now the other block that got violated, this is it has automatically turned into a breaker block now, and you see price came in, tap on it here, then push to the upside. So you see how you can use a breaker block to take your entries. And the breaker block, the only way a breaker block can be invalid is if the breaker block did not clear liquidity. When I mean liquidity, for every little break of structure, for every movement, price does like this. For every movement, price does like this. Every movement, both tiny break of structure, large break of structures, or anyone, at this bottom, there's always liquidity. At this bottom, there's always liquidity. So now if you spot from this point, you can clearly see the liquidity here. There's a liquidity here. There's a liquidity here. So I'll be talking about liquidity on the next video. So there's a liquidity here. There's also a liquidity here. And you see price now came through, taking out this whole sell side liquidity. So that will tell you the breaker block is valid. But in cases where this breaker block did not clear liquidity, the breaker block will be invalid. So if you look at this one also, there's liquidity at this bottom here, gathering like a console. If you go to a lower time frame, you will see there's a consolidation at that point. Price was consolidating, and for when price is consolidating, there's always liquidity at the previous high and liquidity at the previous low. So now price came down, clearing out this whole sell side liquidity. That will tell you the breaker block is valid. But in cases where you see price did not clear liquidity, where the breaker block did not clear liquidity, that will automatically tell you the breaker block is invalid. So now let's move to the next one. So now you see price tap from this point, push to the upside again. So after this movement to the upside, what should you look for next? You should look for a breaker block or an order block. So now where can you spot the breaker block? From this point here, you can clearly see the breaker block here. You can clearly see the breaker block from that. If you recall from the previous video, the types of breaker block, you can clearly see the breaker block there. And now for the breaker block to be valid, for you to know the breaker block is valid, you can clearly see liquidity at all this low, and price came down, clearing out all the liquidity. So that will tell you the breaker block is valid. Because price cleared out all sell side liquidity. While in cases where you see price did not clear the liquidity, the breaker block is invalid. So now if you should trace it back from here, this is the breaker. You trace it back now. Let's see if price tap into it. So from this point now, trace it back. You see price came back for the breaker block. So it came back, tap into the breaker block on this point here, then you see the reversal to the upside back, taking out this previous high. So the reason why you see price came back, remember what I told you, once the breaker block has not been tapped into, price has not tapped into the breaker block, price will eventually come for it in the nearest future or in future trades. So now see this movement price did to the downside now, and you also see this pullback to the downside. You see this pullback now didn't tap into the breaker. That tiny pullback didn't tap into the breaker block. That's why you see when price pushed to the upside, it came back again just for it to tap into the breaker block. So you see the breaker block can never be left behind. Price will always come for it. So now see price came for the breaker, then push to the upside again to take out this previous high. Remember, when using a breaker block, your take profit must always be on every previous high or every previous low, or you can use a 1:5 or a 1:3 risk to reward ratio, because price will always respect those risk to reward ratio. So let's move to the next one. So now you are when you open the chart, now you follow the break of structures. You already mark your order blocks and the breaker blocks that price has already tapped into. So what should you be looking for next? You should always also be looking for areas where price will create break of structures, like order blocks where price will eventually tap into, or you wait for price to create a market structure shift. That's the only thing you can always do when looking for a daily bias. Either you wait for price to create a market structure shift, or you look for breaker blocks or order blocks where price hasn't tapped into. So now from this point now, this is the final break of structure here. This is the final break of structure. This is the final break of structure. So we have to remove this break of structure here. So that's the final break of structure, which is that I. Final break of structure there. So now after the final break of structure, what should you look for next? Look for areas, or you look for breaker blocks, or you look for order block that price will eventually tap into. So now if you look from this old stuff here, from this old chart here, you won't be able to see any breaker block or any order block to make the trade valid, so to make your entries valid. So since there's no valid order block and there's no valid breaker block, what should you be looking for next? You should be looking for market structure shift. And what is a market structure shift? Let's say price is moving in a particular trend, like this uptrend, for example. Price moving in an uptrend, and suddenly you see price now push to the downside, breaking below the previous low. So if this is the previous low and price broke below it, this has automatically turned into your market structure shift. And what should you be looking for next? At this region, there should either be an order block or there should be a breaker block. So you always have to watch out. So at this region, you must always see a order block or you see a breaker block. So say an order block, either an order block at that region, you see a breaker block at this region, you see a breaker block at this region. So let me take this up a little bit. So either you see an order block at this point, or you see a breaker block at that bottom there after the break of structure. So there are two things you must always look out for when taking trades using this market structure shift. So if there's an order block and there's a breaker block together at that region, what you should expect price to do? Price will first of all use the breaker. Always note, price will first of all use the breaker block. It will always use the breaker block first, then it will go down to take out the previous low. First use the breaker block, take out the previous low, then you expect price now to go for the order block before pushing to the downside. So this is what you should always expect price to do. If there's a breaker block and there's an order block at that the same line after the market structure shift, you always expect price to use the breaker block first. before using the order block. Then in the same scenario, if price is in a trend, if price is in a trend and there's a market structure shift, and on this point there's only a breaker block, there's only a breaker block at this region here. So there's only a breaker block at this region here. What you expect price to do is to use the breaker block, just the breaker block, then take out this previous low. So use the breaker block, take out that previous low. That's what you expect price to do. Then in case it's the same direction for an uptrend, also note this also implies for a downtrend too, but I'm just using the uptrend to give an example. So, and let's say there's, after this pullback, price did a market structure shift here, and on this point here there's only an order block here, no breaker block, just an order block. What you should expect price to do is to use just that order block. Price will use just that order block to take out the previous low. So this is what you should always note. If there's a breaker block and there's an order block together, price will use the breaker block first, then use the order block last. Then in cases where there's just a breaker block, price will use only the breaker block, while in cases where there's an order block, price will use only the order block. So you always note that. So now, since this is the last break of structure, this is the that's the last break of structure, and this was the previous low. So if price broke below the previous low, that has automatically turned into a market structure shift, and it will eventually tell you, or automatically tell you, this uptrend is not valid anymore. So now if you should trace it back now, you see price came from here. Now move to the downside now, then broke below this previous low, so it has automatically tell you the uptrend is not valid. Anymore. And for this kind of setup, you always have need to have patience, because most time it take days or take a week for price to break or to go back to your point of interest, or go back to your zone, just like that. So now from here you can see price was consolidating. From this point, you see price was consolidating before it got to that entry. You see price was consolidating. So all this movement here, you just have to ignore them. Try your possible best to ignore all these movements. Like you see, I don't trade every day. I don't always look for setups every day. I always wait for price to get to my point of interest. So all this consolidation, you always have to ignore them. What you are looking for now is either price to break above or for price to break below, creating a market structure shift. So that's the two things you are looking for. So now price broke below. Now you have a very perfect confirmation that, okay, the uptrend is not valid anymore. Now I will be looking for sales. So what next? After the broke the market structure shift, what you should be looking for next is either a breaker block or an order block. So now what you will do, we'll be looking at multiple time frames. Looking for that order block. Check multiple time frames, looking for that order block. So this is a 15-minute time frame. You go to 30-minute time frame. If you didn't see the order block on those time frame, you go to higher time frames. So I say this strategy, you need to be using multiple time frames. So now you look for the order block. So now on this point now, you can clearly see it using that same pattern I showed you on the previous video. Different types of order block. You can clearly see the order block here, and you see price hasn't tapped into the order block yet. So that would make the order block valid. But in cases where price has already tapped into the order block, that order block is invalid. If price has tapped into it before, it's invalid, but if price hasn't tapped into it yet, the order block is still valid. So now you trace it back, use the line from the body of the candle, you trace it back now, trace it back here, trace it back, trace it back, trace it back. I see price hasn't tapped into the order block there, but I just mark it out. I just mark that out as my OB, mark that out as my order block. So now this is one price respected here, this OB here. So if you should mark this back to this point now, also an OB. So since from those types of order block now, you can clearly see this is also an OB, this point here. Since that's an OB, you have to remove this one, because price will always use, if in a trend, let's say in a trend, let me use a fresh screen. So let's say in a trend, let's say in a particular trend like this, and there's an order block here and also an order block here. Price will always use the first order block. If price want to retest from here, it will always use the first order block. It won't use the second one. It will always use the first order block, then push to the upside, ignoring the last order block. So that's what you saw here. This is the first order block, and this is the second order block. That's why you see price used just the first order block. Then if you trace it back here, price retested on it from this point, then push to the downside again, creating a break of structure. After using the order block or use the breaker block, your take profit must always be at the previous low for a downtrend, but if it's an uptrend, it must always be on the previous high. So for this trade, now if you want to take this particular trade, you can either put your entry here, your stop loss. You can use just few pips for your stop loss, or you can simply put your stop loss. You can simply put your stop loss at this previous high. You can put your stop loss at this previous high. Yeah, simply just simple like that. You can put your stop loss at that previous high. So you can just put your stop loss at that previous high. Then your take profit now should be at this previous low, because price will always respect that zone. Either use this previous low, or you can just use a 1:5 risk to reward ratio. This place where you see risk slash, let me draw it out. This place where you see the that place where you see the risk slash reward coming. So this place at the middle where you see the risk slash reward, you just have to drag this green line until that place show 5 at the dot. So your risk to reward, you can use 1:5 for your risk to reward. If you are following risk management, you can use a 1:5 risk to reward. But if you aren't following risk management, you can just simply put your take profit at the previous low, and you see price will eventually go down, hit your take profit just like that. So after the breakout structure now, what you should look for next, look for order blocks or breaker block that price will eventually tap into. So now after the breakout structure, always have to look for order blocks or breaker block, and for you to be able to spot this also, you need to check multiple time frames. So this is the 30 minutes time frame. So you check on 30 minutes time frame is if there's an order block or a breaker block on the 30 minute time frame, and if you look closely, you won't be able to spot any order block or any breaker block from this 30 minute time frame. So let's check the 1 hour time frame. So you always have to use multiple time frame. So after this okay, so let's say the OB from here. if you are using this OB now, your take profit now would be at the previous low, which is this low here. Take profit now will be at this previous low, or you can simply follow that the same pattern of using 1:5. Your entry will be at the beginning, then your stop loss at that previous high. Then you can just drag this down until it shows 1:5 risk to reward ratio, and you see price will also eat your take profit. That's if you are following risk to reward. Then if you are not following risk to reward ratio, you can just put your take profit at the previous low here, and if you should trace it back to this point here, you see price also eats the take profits just like that. So now after the breakout structure, what should you do next? Look for a breakout block or an order block. Also know that for every breakout structure, you must always mark it out. You must always mark that zone as the breakout structure, just like I mark this and I also mark this too. You must also mark all of them in order for you to get your direction of price. You must always get that direction. So now you see this strategy take patience. So if your take profit should be at this low now, you know it took days for price to hit that take profit, so you always need to have that patience. Always need to have that patience, because from here now you see price came down and was consolidating, creating multiple consolidation just like that. So you just need to have that patience. Don't panic when taking this kind of trade. You always need to have patience. Always need to have patience, and don't open too many positions. You know you can't handle the risks of taking losses, so don't open too many positions. Always risk what you can afford to lose. If you are already in a winning trade, don't open more position, because if the price should reverse back, you will be on a bigger loss. Don't open too more. Don't add positions. Don't add more positions to a winning trade, or don't add more positions to a losing trade. Also, always take your entries. If you want to take 5 trades, take the 5 trades from the beginning of the entry. Don't wait for price to move down before you start adding more positions, because if price should reverse, you'll be on a bigger loss. So if you want to take 5 trades, take it from one particular point. Use the same stop loss, use the same take profit. If you want to take 5 trades, take it from the same point. If you want to take 10 trades, take it from the same point. Don't wait for price to move down before you start adding more positions. You get me right? So from here now, after this breakout structure now, you look for a breaker block, and also, or you look for an order block. So now from here, if you should look from this point here, you can see there's an order block here. Price hasn't tapped into this yet. Price hasn't tapped into this order block yet. After the breakout structure, price hasn't tapped into it yet. So I'll be marking that out. Marking this out. So this is the OB. Price hasn't tapped into. And what you should also look for next is either a breaker block or an order block. And remember what I told you from the beginning of this video. If there's a breaker block and there's an order block on the same direction or the same line, price first of all use the breaker block first before using the order block. So now let's move down to 30-minute time frame. Let's check for the breaker block. So if you know the types of breaker block from the last video I showed you, you'll be able to spot out all these entries here. So let me go down to 5 minutes. 5-minute time frame. Okay, from 5 minutes. So this is the breaker block. So if you should trace that back now, so this point now, you see price mitigated it from this point as a breaker. So let's go back to the 30-minute time frame now. So price mitigated that, came down, took out this previous low, creating a breakout structure at that point. So what are we expecting price to do now from this point now? Remember, price will first of all use the breaker block before going back to use the order block. So now we're expecting price now to go back from this point here, go back to this point where the order block is. tapping into it before pushing down again to the downside, taking out that taking out the previous low at this point. So this is my directional bias on BTC USD. So this is how you can always get your directional bias on BTC USD, by just following the trends and following your trading pattern. Once you follow your trading pattern. Make sure the trend align with your trading pattern. If the trend does not align with your trading pattern, always try your best to ignore those entries. Always try your best to ignore those trades. If you know you can't find a setup, don't try to force a setup out of the market. Once you see the market does not align with your trading strategy, always try your possible best to avoid taking any trades, because those times you take those trades, you'll be taking those trades without even having knowledge why you are even taking the trades. So always wait for price to follow your trading pattern before you decide to take any entries. It's just like that. So that's how you can always get your directional bias. Follow the trend and look for areas where price creates breakout structures or market structure shift. So now from this point here, this is the previous high price created here. This is the previous high currently that price has created. In cases where price now, you see price now, let me draw this out now. So this is the previous high price has created here. Previous high price has created. So in cases now where you see price now push from this downside, then broke above the previous high with a full body candle, and the candlestick must close for it to be valid. Close a full body candle. I have to tell you the downtrend is not valid anymore, and price has switched to an uptrend. So now we should be expecting for price to now go back, look for areas where there's an order block or areas where there's a breaker block. You see price will tap on it, then reverse back. That's to tell you the downtrend is not valid. But in this case, since there's there's an order block there, the trade is the entry downtrend is still valid, because price has first of all used the breaker block. Now price is going back to use the order block to take out the previous low. So also one thing you should know when taking trades, what you should know is that always try to use one particular type of type of stop loss, or use the same pips for your stop loss. Because one thing is that if you should take 3 trades and you use the same stop loss for those 3 trades, even though you lose, or they say you win 2 trades out of the 3, you will still be on profit for the day. Even though you lose 2 trades out of the 3 and you gain just 1, you will still be on profit of the day. And even if you lose the 3 trades, your drawdown or your percentage, like the percentage you lose for that day, won't be much than when you just use random stop loss. Always avoid to use bigger stop loss for your entries. The bigger your stop loss, the more money you'll be risking. And in most cases when you decide to use a bigger stop loss, always try to reduce your lot size. When you are using a bigger stop loss, always try to reduce your lot size in order for you not to risk more than you can afford to lose. So while in cases where you see you are using a smaller stop loss, you can then decide to use a bigger lot size. But if you are the kind of person that you are not good at using tight stop loss, you are always good at using big stop loss, always avoid using big lot size because of the pips of your stop loss too. So that's one thing you should also avoid. Then I also talk about not taking not adding more positions to a winning trade or a losing trade. Always stick to opening those positions from the beginning of the entry. If you are starting from this point, if you are taking entries from this point, open all your entries from that point. Don't wait for price to move down before you add more positions. And also, if price is creating a break of structure or price is creating a market structure shift, and you see you don't have any valid entries, or you don't see any breaker block, or you don't see any break of order block, always try your possible best to avoid taking those trades. Because you'll be taking those trades without any idea why you are even taking it. So you should always avoid those things. So that's all for today. So on our next class, I'll be doing a video on how to create plans, when like a daily plans on how you want to take your daily trades. I'll be creating a video on that, the amount you'll be risking on each trade, the kind of stop loss you'll be using on each trade, and also your um let's say your take profit, how many risks reward you'll be using, and if you risk certain amount, how much you'll be gaining if you take certain amount of trades. So I'll be doing a video on that. So this is all for today. Thank you.